Secret wars, finding candidates all over the place. I don't run any screeners yet, or I used to. Back in the days when I read Stan, I said, man, if I could program this, an algorithm, find all the screeners. And that was back in 2007. I think I ran some screeners and PNF charts, breakouts, and then take a look at the chart. But what happened in between then and now is with my classical trading framework, I just have, I don't know how many instruments there. I look at Forex, pretty much all the pairs, NASDAQ, at least 50, 60 NASDAQ stocks. And New York Stock Exchange, same thing, another 50, 60. TSX, I have at least 20, 30 I'm looking at. TSX Venture, I have about 20. The futures, I have most of them. And ARCA, I have, and BATS, I have a whole bunch, maybe 40 of them I'm checking out. So you take all that and all the charts, all the tickers I all have alerts on them. I could take any one. If I added it to my TWS software and my tabs corresponding to each index, I have, first thing I do is no matter what the framework, I have these alerts like that I'm doing right now. I'm setting at a key support and resistance. And worst case, if I don't continue, if I get distracted, go somewhere else, I have those alerts set at these key levels. So the chart's could morph. It could stay in this range for 2, 3, 4 years. I don't know how much long. Doesn't matter. My alerts are there. And when they get triggered, I come back to it. So is that my screener? It's like, I don't know. It's like my screener that, because screeners are good, but you always have to look at the chart. There's always like, I don't know why there's, yeah, but this one, it looks good. The way it morphed, the way there's a launching pattern. How do you code that? I know there's, and I guess you get kind of a feel for it. So I think that's the hardest part, is programming that feel into an algorithm. But I definitely agree there's probably some ways you could put it. You could check here. You could do a whole bunch of screeners, highs, lows, pattern. But then after that, do you take into context what happened before? Or you just look there. So eventually I moved around from the screener. Maybe now there's better, the screeners look like, with there's chart mill and stock charts. I looked a little bit. They seem to have their screeners looks better, more programmable. Maybe I know now more what to program, or the community does. But right now, just having all my alerts on all those stocks, I have a lot of candidates. I don't have to go far to get A+ setups or get candidates. Maybe and I don't need that many signals, honestly. I don't want to be in more than 10 positions at a time. 1% risk of my NAV per position. That makes, if everything goes wrong, I could lose 10% of my NAV one shot, which is okay. But I don't think I want to be that more overcommitted than that. And yeah, so that's about it for screeners. And I keep looking at the stocks. So even now, if I have 5, 6, or 8 stocks that I'm in, and there's always room to add 2 more A+ setups, I have time enough. There's my classical charting pattern ways with my monthly candles, where I have a lot of time to check out for closes. And now with my Stan Weinstein focus, it seems that when the markets or an index starts turning stage 4 or is in stage 3, there's already precursor stocks that are already starting to be stage 4, which is starting to bring down the index. And after that, they all follow. So there's like a lot of supply of stocks entering stage 4 right now. And it could be the same thing for stage 2. Now on the gold and oil plays, they seem to be wanting to explode from a stage 1 to a stage 2. And they're all following. There's the leaders of the pack, which are starting to explode. And after that, there's always latecomers to the party. And I could always catch those. But If I'm in A plus setups already, like I said, 7, 8, there's not room for much, right? So, and I don't want to be in more than that. So it's okay. I think I'm good for that. And now it brings me to IEO, which is that was a long intro. IEO on BATS, iShares U.S. oil and gas exploration. Look at that. Okay, we had a nice stage 2 back in 13, and timber stage 4. And see, guys, 30-week moving average. Let's just look. There you go. All right. Here's my breakout right here. You could do it two ways. You could look at the candles. And when you see there's a candle, see volume creeping up, you see a big candle that has more than twice the average of the previous 4 or 5 weeks. The corresponding candle should be a breakout candle right here. Okay, for this small launching pattern. And you would have been in, but what would have happened, or was it closer down here? This is a breakout continuation pattern. Yeah. Here's the volume. Okay, it's right here. Too many candles. Okay, let's just go back in time. Okay, time moves on. Here I have a high. More precise, right here. And then I had this candle here. Didn't quite have the volume on this one, but this one I had the volume. So right now, this is my breakout candle. I'm going to move my arrow to this one. And off we go. Here's the support. So what do you do? Traders, investors. Investors, it's easy. It's below the support, below a round number, so maybe 59.95. Traders, 4 to 6% below the breakdown line. And if you feel it's too close up, you could always go right below 30-week moving average if you want that extra support of not getting whipsawed at the beginning, which is where you have the most risk before it really takes off. And this is what you want to see. Breakout. This candle here. Then pull back. Volume decreasing. And then after that, this is where I thought there was the other breakout, this candle here. More volume, but still you're pulling back. And then that's not a good sign right here. When you're increasing volume on the pullbacks, and you see instead of being a classical Stan Weinstein move where you just have this small pullback here and it explodes, it sucked you all the way back in. Right here. So traders, you could have tolerated this a short while, or else traders would have probably bailed and say, look, I don't want to be in this play anymore. Wait, pull back, move back up. Right here, you would have moved your sell stop. So traders would have been out right here. Investors would have, sell stop is right here. So now, for this particular early stage 2, traders are out and investors are still in. And off we go. Pull back, price moves back up. Investors move their sell stop here. Pull back, price move back up. Investors put their sell stop here. And right here, pull back, moving up nicely. If you're unsure, I like looking at the shapes, U's or V's on the RSI. And so for candles, sometimes it's not totally clear. Price action. All right, first things. Do I have a valid trend line? I think I do. Look at that. One, 2, 3, and right here you would have had the break. So the sell stop, you could have moved. Price action started going back close, near to the previous where you were high. You could have moved it up here, your sell stop. Either case, on the trendline violation, you would have bailed right there. For the investors, half of your position, and the other half when you would have violated the 30-week moving average or the previous sell stop that you move. Investors start putting their sell stops like traders when they're starting to get close to the end of the move. Trendline violation usually is a good move that you're going to start going sideways, as you can see here, for many weeks. You want the stock to go up like that fast. You want pullbacks every 1 to 3 months. You want to pull back. You don't want to be in a 3, 4, 6 months just sideways move. You would have exited right here at that would have been the sell stop for the investor also right here, and then that's the move. All right, sideways action could be stage 2, end of stage 2. You're in a stage 3, could continue. Oh, and continued. Where's your continuation move? Here you had a bounce off the 30-week moving average. You could have said maybe this breakout candle right here. Or if you didn't trust it, you could have waited maybe for a bigger pattern. There isn't... there's not a lot of volume. You might not have been an A+ setup. Too risky to get in before it really takes off, except all the way... Maybe these candles here. This candle here seems to have more volume. It's hard sometimes on continuation plays. You get burnt. Go over some posts on stageanalysis.net, and it's fun because I have my experience, what I'm doing now, and a whole bunch of other people. It's very important to read what people go through, their logs, they share, and you could take in that data. And continuation plays, going deeper into the stage 2, they're riskier and riskier. Question is, how do you declare if it's deep in? If the bull run, the purpose of Stan Weinstein's stage analysis is stay in a bull run for as long as it can. This could last 5-6 years, this bull run. So who knows? And who knows if going in, this is late or not late. But definitely I remember, the best place to enter is when there's sideways move and a bounce off the 30-week average. It's better than going in on a pattern that explodes far off the 30-week moving average. You want to be as close as possible and just play the break, the bounce off of that. And what happened here right after that? Okay, stage 4. Right here, below 30-week moving average. Below horizontal break line. And you had the Ichimoku cloud here, support. Look, you're far off. You could get some steam. It could have bounced back up, which it kind of did. And then you had your pullback here on the lighter volume, those green candles. And then, whoa, huge volume on the way down. Next leg down. So here you would have moved your sell stop, investors, traders, and you could have probably joined in the action back here. And pull back. Oh, pull back on strong volume. Price action still goes down. You move your sell stop here. Investors, traders. Remember, draw those trend lines. And there you go. After that, investors and traders, take half of your position off here. Traders, take your remainder of your position right here. And so do investors, because after trendline violation, that signals that the chart's morphing or sideways or reversing. Anyways, it just means that it's not continuing at the same velocity as it was, or else it would have bounced off and kept that angle, and it kept accelerating with the angle of the trend line. And then you're out. So let's see what happens after that. Oh, see? Again, the trend line violation and there's sideways action. It happens often, more often than not. or very close to. And there we are in a stage. That stage 4 has become a stage 1. And if you have a continuation move after that, then you could always join in back the action. So you see all this candle here? Okay, price action went back here. You don't want to be here anymore. That would have been considered a stage 3. Let me put this arrow here. Okay, so this candle here, this little tiny candle. Here you have that 70 support, and this one breakdown on high volume. Look at that. And that's a sign that you could have joined back in. That's the continuation of that stage 4 that became 1, and 1 that became 4 again. And you could have rolled that again. Could have drawn a trend line on violation, take half your position, traders and investors. And here you would have moved your sell stop right here for traders, investors, and you would have taken the remainder of your position off on the violation of that sell stop that was moved. And since it's trend line violation, investors, you do the same as the traders. All right. Were there any more continuation moves? There sure was. Price action C starts going sideways for 4 or 5 weeks. You're not in the trade anymore. No problem. You've taken some profit. High percentage plays. Stan Weinstein system. It's never go for gold. You'll last as long as you can in the stage. But most often than not, you will make a little bit more money than break even. You won't be negative. And once in a while, you'll be able to ride a nice stage 2, which respects, which won't whip you out, and that's what you're hoping for. But you won't have those 1% drawdowns of your NAV happen that often, maybe 2 times out of 10. And here we have a continuation breakdown. Look at that high volume right here, those 2 candles, and that's the way it goes. Down, down, down. Okay, is there another trend line to draw? Sometimes when you have a trend line, but it's close to a 30-week moving average, it doesn't help you much because you'll bail either case at the 30-week moving average. So there was a nice breakdown, unless 1, 2. It's hard. 1, 2, 1, 2, 3. Maybe here. If you would have been aggressive on the drawing that trend line, 1, 2, 3. You could have taken half of your position right here, investors and traders. And here's a pullback right here. Price action goes back down. So right here, traders, investors have the position. Trend line violation, have your position, and the remainder right here at this line. Traders, investors. So not bad. Now what happened? Are we back into stage 1? And here's where we are today. All right. Looks like a war zone, man. Stan system making you work. No blind, just setting your sell stops, entry, and your profit, and your buy stops when you start shorting, man. You got to keep an eye on this. These are weekly candles, so it's not daily work. You could just check it out Saturday, maybe. IEO, stage 2 or stage 4. Now we're closer to a stage 2. You see, as we're going sideways laterally, that cloud, that support, that resistance starting to get thinner and thinner, pile on sideways. Right now we're above resistance. There's nothing on the upside, and that's why I have that at 70. Right now price action is at 62. Keep an eye out for it, and there's a high volume candle that breaks out, that goes around here. I think we're ready to go to have a nice stage 2 for IEO. All right, keep practicing. These podcasts, man, they're there to practice and answer questions at the same time. So if ever there's something that's not clear, or Pat, you're doing it wrong, give me a beep, and I'll be happy to try and incorporate and practice whatever recommendations you guys have. That's how you learn, guys. Never keep your minds closed. Always seek to learn and grind it out. All right. See ya.